Every company relies on accounting services. Accounting ensures that everything financial is taken care of, from your sales to your expenses, even your taxes. Staying on top of your finances is how accountants take care of your company's welfare. So where do you get your accounting needs? Accountants can be in-house or outsourced, but what exactly does that mean? And how do you decide whether it is right for your company? While there are many benefits of hiring an accountant, it's important to know that there's no one-size-fits-all approach for every business. For some, it makes sense to hire an internal team to handle their accounting, while some may find that outsourcing their bookkeeping is better for the long term, especially if their finances are tight. The difference of in-house and outsourced accounting. There are several options when it comes to accounting. You can have your own in-house accountant or hire one externally. Both have their advantages and disadvantages. The first thing that you should consider is the cost savings. In-house accounting is more expensive than outsourcing, but your accounting team will work exclusively for you and your business. Less stress when dealing with day-to-day operations while ensuring compliance with legal requirements like paying taxes on time every year. When a company decides to do its accounting internally, it will hire and train personnel for that purpose. Their skills will be tailored to your company perfectly. On the other hand, outsourced accounting is a great option if you're looking to cut costs while maintaining quality. Outsourced accountants will work with you to set up a plan that fits their needs and budget, which often means paying only for the services you need. This can help you save money by not paying for services you don't need or paying for fewer services than you'd have to if you have accountants on staff. The biggest benefits of outsourced accounting services is the ability to save money in your company's bottom line. If you have a lot of employees and are worried about spending too much on payroll taxes and insurance, outsourcing can help you keep your overhead low while still ensuring that your finances are in order and your business runs smoothly. Now let's get to what can really help you decide. The pros and cons. In-house accounting. Pros. You can control how much time they spend on each task. In-house accountants can handle all bookkeeping tasks for your day-to-day business by recording income and expenses. If questions or problems arise during tax season and auditing periods, they can be easily contacted for immediate resolution of the problem. Cons. Internal staff usually do not have all the required training for complex financial transactions. Thus, you may need to hire another professional if the need arises. Difficulty recruiting competent employees. If you're not able to find someone who can do the job well, it may be difficult to run your business effectively. It can be time-consuming and expensive if you don't have the right equipment or software needed to do tasks effectively. Since the costs of equipment are different from the pay of your employee, as your in-house accounting team would have to look for alternative ways to do their accounting tasks. Outsourced accounting. Pros. The benefit of outsourcing is that you have a variety of accounting services available to choose from, including payroll preparation, compliance and tax preparations, general accounting and bookkeeping. Outsourcing accounting can save you money and cause less stress because it allows you to focus on other aspects of your business while someone else handles the tedious and time-consuming tasks like reconciling accounts payable and receivable, preparing financial statements, etc. If you outsource your accounting services, the software and hardware that you need to run your business will be provided by an outside company. You will not have to pay any annual license fees or other maintenance fees that come with these services. Cons. One of the disadvantages of outsourcing your accounting is that you must entrust your financial data, so make sure to hire the right one. In addition, they won't have any financial incentive to shortchange you or make bad decisions. The main disadvantage of outsourcing accounting is that it can lead to a lag time in the delivery of services. As you work with a company based in another time zone, there might be a delay between when you send an inquiry and when you receive an answer. This can be frustrating if you're trying to get answers quickly or if you need something done immediately. The bottom line. The bottom line is that there are advantages and disadvantages no matter which route you take when it comes to choosing between having an in-house versus outsourcing accounting. What matters the most is finding the right fit for your needs. Download Outsourcing: How to Make It Work and learn how you can make outsourced accounting work for your business. Link in the description box below. You can also visit our careers page to see how you can start your career with us. Subscribe and ring the bell for more content. Follow us on LinkedIn, Facebook, Twitter, and Instagram, or reach out to us at marketing@dvphilippines.com.